Welcome to the Stock Market Daily News podcast for Wednesday, December 3rd, 2025. Yesterday's market action saw U.S. stocks end lower as investors digested renewed volatility across tech and crypto, with the S&P 500 closing down 1.1%, the Dow Jones lower by 0.6%, and the Nasdaq leading declines, slipping nearly 1.9%. The big story? Mounting concerns over a possible bubble in artificial intelligence stocks and a deepening correction in Bitcoin. We'll break down what happened, why it matters, and how it could affect your portfolio, plus a quick look at upbeat momentum in the auto sector and what's next for IPOs. Let's dive into the key stories from yesterday's session. First up, tech stocks faced heavy selling after the Bank of England issued a stark warning about stretched valuations, especially in artificial intelligence companies. The central bank flagged that share prices are nearing levels last seen before the dot-com crash, sparking fears that an AI-driven bubble could burst. For context, trillions of dollars are flowing into AI infrastructure, much of it backed by debt, raising systemic risks if stocks sharply correct. Investors hit the sell button on major AI names. Nvidia, for example, dropped nearly 4% on the day. The message for investors: elevated tech valuations are now firmly in policymakers' sights, adding another layer of caution to AI-heavy portfolios. Meanwhile, Bitcoin extended its epic plunge, dropping 6% to trade below $84,000. That's now over 30% off its highs from early October. What's fueling the fall? A perfect storm of waning retail dip buyers, institutional deleveraging, and global risk-off sentiment. Notably, the biggest corporate holder of Bitcoin, Strategy Incorporated, formerly MicroStrategy, has seen its stock lose more than 60%, and ETFs tracking it are off 80% this year. Fears are mounting that if Bitcoin dips further, Strategy could be forced to sell holdings, compounding downward pressure. Lesson for investors: greater institutional participation means deeper ripple effects when crypto corrects. On the equity technical front, both Bitcoin and the Nasdaq index now sit at critical chart levels. Nasdaq's recent price action formed a textbook hanging man candlestick, often a warning of a potential reversal or pullback after a strong rally. For Bitcoin, the key supports are hovering near, with traders watching closely for a break below 80,000. If these levels don't hold, further downside could shake broader risk assets, putting the so-called Santa rally on ice. Turning to sector bright spots, auto stocks bucked the gloom with continued momentum. Names like Maruti Suzuki, Mahindra & Mahindra, and TVS Motors in India posted standout sales, driving expectations for double-digit growth through year-end. The boost comes on the back of recent tax cuts. Analysts predict that strong December quarter results could push shares higher and keep investor sentiment positive for the sector into 2026. Finally, big questions are swirling around capital spending in AI. IBM's CEO Arvind Krishna poured cold water on the idea that pouring trillions into AI data centers will make sense under current economics. Krishna estimates roughly $8 trillion in global commitments, but doubts that today's technology or infrastructure costs can deliver a real return unless we see major breakthroughs. That skepticism weighed on AI stock sentiment amid ongoing market volatility. Let's wrap up. The S&P 500 closed at 4,572, Nasdaq at 15,110, and the Dow Jones at 36,481. The big themes: caution in tech and crypto as bubble risk mounts, technical warnings flashing for the best performing indexes, but select sector stories, like autos, offering resilience. Looking ahead, all eyes are on upcoming economic data and corporate earnings, as well as any new signals from central banks. Don't forget to subscribe and follow for tomorrow's 2-minute market rundown. Thanks for listening to the Stock Market Daily News podcast.